Hey guys, good afternoon, everybody. Today is Monday, July 31st. It is 4:01 right now. Our scheduled mentoring session is for 4 o'clock. So I'm going to go ahead and set up this room real quick and we'll get started with our analysis shortly. So if you guys have any questions, feel free to put them in the chat. Otherwise, we'll be covering each question in order and we'll go from there. So this session is pretty much going to run for as long as we have questions. So yeah, if you guys have any specific questions, feel free to put them in the chat. Otherwise, we will probably review some of the entries from today. So, all right, let me finish updating this here. All right, looks good. Let me get this link sent out to you guys here in the premium. It's good. All right, so I'll get a few moments for people to make their way in. And then we'll get started shortly with our analysis for today. So if you guys have any questions, feel free to put them in the chat. I don't really have much lined up for today. So if there's anything that you guys want me to review, whether it be a strategy, an entry that you guys took today, I mean, anything really, feel free to put your questions in the chat and we will cover the questions in the order that they come in. We'll just post this up real quick. All right, guys, good afternoon, everybody. Today's Monday, July 31st. It is 4 p.m. right now, Pacific time. Our scheduled mentoring session is for 4 o'clock. So we're about to get started. If you guys have any questions, feel free to put your questions in the chat. Otherwise, I don't really have anything lined up for today. So I'm just going to be covering questions as they come in. Let's see, Shivs, thought I'd come on for a bit. Oh, yeah, you're here, Shiv. It's like midnight for you over there. Hey, CJ, how's it going? Hey, Natasha. Perfect. Yeah, if there's any questions that you guys have, Shiv, Natasha, CJ, anybody really, if there's anything that you want me to cover, if you guys took an entry today and you're a bit confused about it, let me know and then we can review it. I don't really have much lined up for today, so this session is going to go on for as long as we have questions. I think the main stuff that we'll probably review would probably be like the momentum pullback scalp entries for the 1 minute and for the 5 minute, to just clear up some things if you guys are a little bit confused about those strategies. So yeah, definitely. So yeah, Shiv said if I can go over that strat, definitely. Hey, Talanji, good afternoon. Hey, Dan. All right, cool. Looks like majority of you guys are here. So I mean, if there's any other questions, guys, feel free to put them in the chat. But the main thing that I'll be looking at today looks like it'll be the momentum pullback scalp. So we'll start off with the 1 minute over here. I'll show you an example of the strategy. We'll go over to, we'll just look over here around 7 o'clock because I think there were a couple entries here that came up. So I'm just going to go over here and rewind it. Let's see what this pulled back to. See if there's any retracements here. Okay, so I think there was one entry that was right here. So we'll just use this as the main example for now. So let me put the criteria up here for the strategy. So this is going to be for the momentum pullback scalp on the 1 minute time frame. Oh, let's see, Natasha said, I just want to see examples of the momentum pullback strategy so I can make sure I understand it. Yeah, sure, Natasha. So here goes one example over here. One thing that we like, the reason why I wouldn't have taken this trade and why I didn't take this trade during live is because the volatility was so low. So there's a couple things that you can take into consideration that aren't necessarily required, but you know, we've been using it lately just to avoid getting caught in positions that pretty much go sideways for a very long time. So we're going to go over the criteria here. This is technically an entry. So I'm going to go over the requirements here. So first, you want to identify the direction of momentum, or identify the direction using momentum and the trend on the 1 minute time frame using the trend meter and the pivot. So first, you want to identify momentum, right? The first thing you want to look at is where is the nearest momentum signal. So right here, we have a buy signal indicating that momentum is going upwards. So with that said, that's going to be part one of step one. Step two, you want to confirm the trend. So looking at where price is right now, you want to look down at the trend meter. You can see the trend meter down below is green. This means that price, the trend is bullish. And also you want to see where price is with regard to the pivots over here. So you can see that price is above the pivots and the pivots are starting to angle to the upside with the trend meter being green. With that said, we can pretty much assume here that the trend is bullish, right? So for step one, you want to identify the direction of momentum, which we did, it's bullish right here. Second, you want to identify the direction of trend using the trend meter and the pivots. So right here, price is above the pivots are angling up and the trend meter is green. That's going to confirm that we have a bullish direction. So once you confirm the direction, you'll know that you're looking for buys here, right? Once you confirm that, next you want to identify a push in that direction. So you want to look back to the most recent momentum signal right here, and you want to make sure that price is pushing in that direction, right? It doesn't have to be necessarily all the way back here, but if you look back, just look back at the most recent candles. You can see we had a green candle, green candle, green candle, right? This is indicating that price is pushing to the upside. So with that said, we have step two. Going back to step one, confirm direction of momentum. Momentum is bullish. Part two of step one, identify the trend. Trend is bullish. Step two over here, identify the push in that direction. There's a push right here. Step three, you want to identify a pullback. So you can see that everything kind of lines in, right? It pretty much goes in flow with each other. So step one, identify momentum. We have momentum here. Part two of step one, identify trend. We've identified the trend. Step two, identify the push. Step three, identify the pullback, right? Price pushes up. This red candle right here pulls back. Once this pulls back right here, you can start looking for entries at the nearest 0, 0, 10, 20, 30, 40, 50, 60, 70, 80, 90, basically at every 10. So this candle right here retraced down to the 28 point. So 35,628, your entry would be right here at the 20 mark because you're going to go at the nearest retracement area. So price pushes up, retraces, the nearest area for entry is going to be right here at the 20 mark. So once you have that set up right there, you'll put the pending buy order right there. This one's a little iffy because the entry would actually be below the pivots. So price would have to retrace down a little bit, but this will still technically be satisfy the requirements because you're still looking at an entry here. The entry is still above momentum. If this entry was a little bit lower down here, then this for sure would not be an entry because momentum would have been right here and the pullback would be farther than momentum. So right here is just an example. I know it's a messy example, but it is an example from today. Price would have retraced right there. You would enter at the nearest 10th, which would be right here at the 20 mark. You set your TP to 100 pips, stop loss at 250 pips, and then you would exit if you had an opposite signal. So right here, price pulls back. You can see with this candle right here, it comes back, it touches the entry point. It would have filled your pending buy order right there. And then as soon as it fills it, you'd be in profit. Price pushes up further and it hits full TP right there. So there goes an example of a momentum pullback scalping trade here. If you guys have any questions regarding this, let me know. Otherwise, I'll see if I can find another example here. So if there's anything regarding this, guys, just pop into the chat right now. If not, I'll look for another example. I think there was another entry that came up after this. Yeah, sure, Shiv. Okay, so when I'm doing this right here on the 1 minute time frame, I'm only taking one per momentum signal, right? So after this right here, I'm pretty much done. In order for me to take another buy entry here, I would need a sell signal to confirm the retracement, and then I would need a buy signal to confirm the continuation to the upside. So once this over here would have been taken, I would have been done with this, with any entries at this point. So now I would have to wait for another setup to come up. So I'd look for a sell signal and then another buy signal to confirm continuation of price. Okay, so here goes another example right here. So see how I mentioned we needed a sell signal? This pretty much resets the setup. So price pushes up. I mean, there's more entries that you can take here. For me personally, I only take one per momentum. A lot of people will take multiple entries per momentum. I think it's risky, but if you guys want to do it that way, you can. So for example, if you wanted to take more here, price retraced right here again, your entry would be at the 30 mark right there. So if that's the case, then you would take another entry right there for another 100 pips. So that'd be one right there. Price pushes up again right here, retraces on this candle, no entry there, retraces on this candle, no entry there. The entry would be here at the 50 mark. If you wanted to take another one here, there'd be another opportunity at that point, and then it would hit TP again right there. So you can see there's like about 3 entries that would have happened right here in between this momentum signal and this one. For me personally, I only take one per momentum. So I'd only take this first one, and I would skip all these here until we get another sell signal like this, because then this resets it. So once this is a reset, you have another buy signal, you can start looking for another entry. So again, right here, we have another buy signal, right? So at this point, you start over the requirements. First, you want to identify the direction using momentum. There's momentum right here, so we know it's bullish. And then for the trend, you can see prices above the pivots, trend meter's green, pivots are angling up, same thing, right? Same thing that we looked at over here. So with that said, we have price pushing up right here. We have this candle right here retracing down. At this point, you would make your entry at the closest 10th mark. So that'd be right here at the 40. For me, I would probably skip this one. So this one right here, I would skip because price is too close to this momentum signal. If price pulls back too far, then it can easily just reverse on me, right? So for me personally, I wouldn't have taken this trade here, but I'll just show you this as an example because this is still technically an entry point if you wanted to take it. For me, I'm a conservative trader, so I only want high quality entries. But if you want to take every single entry, this right here would be another entry. So right here, price pushes up, we have bullish momentum, bullish trend. This candle right here retraces back. You want to look for the most recent or the closest whole 10th number, which is right here, the 40. This candle retraces right here. It closes at 43, entry be at 40 right here. So at that point, you enter a long position right here. You have your pending waiting order, your pending order just waiting there. You go in for 100 pips. Let the next candle run. So it doesn't actually fill right there. Okay, so at this point, we have another opportunity right here. Price pulls back again right here. So the next entry point would again be right here. Same thing, same point. So this is actually a better setup because price is actually pushing away. All right, price pulls back again right there. It doesn't actually fill. Price pulls back again right here. Okay, at this point now, this here closed at the 50 mark, right? So your entry would actually happen. It would happen right there. So that candle right there closed. The next level is going to be here at the 50 mark. And that's where your entry would be. Again, I probably wouldn't take this trade because the volatility is so low. The ATR down here is 10. But I just want to show you guys this for demonstrational purposes. And you can see right here that if it filled, it would have hit TP. I don't know if it would have filled or not. But if it did fill, it would have hit TP. So let me see if I can find another example here. It's not a really good example because the movement is so slow. This is why we don't trade when the volume is too low. So that entry there technically would have hit. If it filled, it would have hit. Let me see if I can find another one here. Okay, at this point now, price is now bearish. So let's see. Okay, so let me show you an example of a sell now, because this is now shifting. So we're no longer looking for buys here, we're now looking for sells. The reason for that is we'll go over the requirements again. So for step 1 over here, identify direction using momentum. We have a sell signal right here. Once you identify that sell signal, you want to confirm the trend, right? Price over here is below the pivots, trend meter is red, pivots are angling down. With that said, we're no longer looking for buys, we're now looking for sells. So once we've identified the direction here for a sell, you want to look for a push in that direction. So again, right here, same thing. Price is pushing down. So you can see over here how price is pushing down this direction. Now this candle right here retraces up, right? As this candle retraces up, it's at the 30 mark. So the entry would happen right there at the 30. So now you're going to have a pending sell order right there, just waiting for that to fill. Again, you're going to go for 100 pips. So once this pushes up, it's going to fill the order. Once it fills the order, then we write it back down. So again, let's look at the requirements. Right here, identify direction of momentum and trend. Again, we have a sell momentum right there, price below the pivots, trend meter red, pivots angling down, price below the pivots. Second, identify a push in that direction, price is pushing right here. Third, identify a pullback. This green candle right here is the pullback. Enter at the nearest 10th. So right here, this candle retraced up to the 29. Entry would be at the 30. You'd have your pending sell order right there. As soon as price fills it, you can see right there that it immediately fills it and then it comes down. It doesn't necessarily hit TP yet, but it's now filled. At this point, you're in the position. Price kind of goes around a little bit. This is where you don't want to be trading. That's why whenever the ATR is too low, it's at 10. I wouldn't have taken this trade because this will end up going back and forth for a little too long. Like I don't like when price goes back and forth for too long. I want it to fill and then go straight to TP right away. If the volume's too low, then you're going to be stuck in this position for longer than you need to. So again, right here, price kind of pushes around, it drops down lower, goes sideways for a bit, and eventually it does come down. So you can see it takes some time, but eventually it does come down. Typically, these trades hit right away. So like, for example, over here, this one hits within like a minute or two. This one over here, you would have been holding on to this position for about 7 minutes. It's a little longer than usual. Typically, you want to hit your TP within 5 minutes, but you can see that the strategy still hits. It's just you get a lot of consolidation, a lot of ranging if you go in when the ATR is too low. Because before we didn't use the ATR, but now that we've been using it, it helps us focus on higher quality trades. So there goes an example right there for a sell. If there's any questions regarding this, guys, feel free to put your questions in the chat. Again, I'm here to help you guys out. So, unless I get questions, I can't really help you guys with any problems that you guys have. So if there's anything that you don't understand, don't be scared to comment on it or ask any specific questions, because that's the only way you guys will learn, right? You guys can't just learn from me explaining this here and showing you examples, because of course the examples I'm going to show you are going to look good because I'm showing you exactly how it's supposed to look. But if you guys look at entries real time, it's not always going to be this clean. So other than that, all right, so Shiv said now he wants to see an example on the 5 minute, but it makes clear sense now. Yeah, definitely, Shiv. All right, so we're done with this 1 minute over here. Talanji wants to see how it's different on the 5 minute as well. So let's go over here to the 5 minute chart. The main difference with the 5 minute is going to be, oh crap, what do I do? The main difference with the 5 minute. There we go. Okay, so the main difference with the 5 minute here is that for this one here, you can take multiple entries per momentum signal, and then on top of that, you can take it for a 1-to-1 risk reward. So let's see if we can find any examples here. I don't think there was really much of a direction here. It's hard to confirm the direction because, well, especially from this morning, because this morning price wasn't really moving too smoothly. So I didn't think we had anything this morning. I think we had something when, actually, no, there was nothing here because price didn't necessarily come around. Yeah, so we didn't have anything during the live session. And then you can see over here that price was just going sideways like pretty much all day. Right here and right here. So I don't think there was any entries here. I was looking to see if there was any entries that have been right here, but you can see that we didn't get a sell signal to way down here. And there wasn't really much of a push in this direction. So, and let me I'll kind of give you guys an explanation of so there's obviously no entries right here because price is in between the pivots. It's not really below or above. The only time that we could possibly maybe have an entry would be somewhere around here, but this here still wouldn't be an entry because there's never a push in the direction, right? We had a sell momentum right here and then price retrace on this following candle. There's not really a push in this direction after the momentum signal. So typically you need for example, over here, you would need a buy signal and then a push in that direction. You don't really have that right here. there was a push in the direction right here, but then I don't think there was any entries that actually came up over here specifically. Because we were still trading until like 8 o'clock. So we were on the charts until 8 o'clock. We didn't take anything on the 5. That's why I know there wasn't any entries here specifically. Let me go to a different day, or let me just show you an example over here. So I'll just show you an example from pre-market basically. I mean, but you still wouldn't take a trade here. So the ATR here is kind of low. I'll just show you an example here, but this wouldn't be like an actual entry. Let me see if there's one during London session. Because if there's one during London session, okay, price pulls back right here. No. I'm looking down at the ATR here to see if the ATR is high enough, because we typically need at least 15. There were some entries here, but there's just no, like the ATR isn't high enough to actually take any. Here, I'll just show you an example here of the 5 minute. So let me put the criteria up here for the 5 minute. This isn't an actual entry that I would take because the volatility is too low. You want at least some room there to take your trade, but I'm just going to show you an example of like how it'd be applied, and then we'll go back to like a previous day where we can see the entries that came up there. So here's the 5 minute right here. You're going to do the same thing. You're going to identify the direction of momentum and trend using the momentum indicator, the pivots indicator, and the trend meter. So first, you want to identify momentum. We have a buy signal right here, so you know that price is going upwards. Next, you want to confirm the trend. You can see price is above the pivots, the trend meter is green, and the pivots are angling up, right? So with that said, we have a bullish direction here. Same thing we did on the 1 minute. The next thing you want to do is confirm the push in that direction. You see there's a buy signal right here, some green candles, price pushing to the upside. And then third, look for the retracement pullback, right? Here's the red candle, retracement pullback. And you're going to do the same thing. Enter at the nearest 10. So this candle right here retraces down to 21. Your entry would be right here at 20. So the main difference with the 5 minute and the 1 minute is that you're going to be entering with a 1-to-1 risk to reward ratio. So you, in order to identify what the TP stop loss is, you look down at the ATR. Right here at the ATR, it's currently 9. So with that said, you're going to enter for 9 points both ways. Typically, you want to have at least 15, but I'm just going to show you this example. This is London session, so it's moving a little bit slower. So, I mean, if you really wanted to trade London session, you can still apply the strategy. It still works fine. It's just, it's going to be a little riskier because the volatility is a lot lower. So with that said, this right here is the entry. We let the trade run, pulls back right there. It fills, goes straight into profit, and goes straight to TP right there. So again, it's not one I would personally take because the volume is kind of low, or maybe I would take it because you're expecting volume to be low anyways during London session. So it still works. It's just, I don't trade London session. So I don't know if this volatility here is good enough or not. Typically during New York session, you want it to be around 15. I guess during London, it's fine to be around 10. But I mean, who knows? I don't trade London session, so I can't really say exactly how it's applied. The other difference with this here is that you can take multiple entries. So Shiv, remember on the 1 minute, you only take one per momentum. On the 5 minute over here, you can take as many as you want, because the thing with the 5 minute momentum signals is that they don't change very often, right? They come up every once in a while, but they're not like the 1 minute where you'll get a buy signal, then a sell signal, then a buy signal right after, where you can take multiple entries. So pretty much the same thing. It's just the only difference is you'll be able to take more entries here on the 5 minute. It's just, it's going to take more patience because you have to wait for, for these setups to set up, because this is like 5 1 minute candles per candle versus the 1 minute where each candle is 1 minute. Yeah, let's see if there's another example here that I can show you. All right, so this is from Friday. Let's see if we could find one over here. I actually wouldn't take this one right here. So this, I'll just show you this as an example, but I wouldn't have taken this one here. I mean, obvious reasons. Prices, it's pulled back a little too far. So again, right here, I mean, just looking at the same thing. Let's put up the 5 minute, which is right there. Same thing, identify direction of momentum. We have a buy signal right here. Price is above the pivots. Trend meter is green down below. Price is above the pivots and they're angling to the upside. Right here, you can see that the obvious direction is bullish, right? Identify a push in that direction. This green candle is pushing up. This red candle right here retraces. Once you have that, you enter at the nearest 10th, which will be right there. You have your buy signal right there, just waiting. Have everything here lined up. Actually, ATR right here is 28. So it's actually pretty high. So this is what you're looking for. You want the ATR to be above 15. Right here, the ATR is set at 28. So you have 1 to 1, 280 pip TP stop loss, or 28 points, whatever you want to consider it. The trade comes back and fills. So this right here actually didn't work out. I forgot. I think there was news on yesterday or on Friday. So let me check the calendar real quick. Yeah, there was news. There was revised view on consumer sentiment. So I don't think we took any trades around that time because we didn't have any losses on Friday, right? Let's see. So last Friday we took this 1 minute. We didn't take any 5-minute trades. I think the reason why we didn't take it was because market was reacting to the news at 7 o'clock. So I don't think we took any trades around this time here. I just want to show you guys an example of specific entry. That right there didn't play out, but we didn't take that trade. So that would have been one that we would have skipped. I think there was another opportunity right here. Same thing. So I think this one over here might have been okay because this one was later. This was too close to news right here. So I think that's why we skipped the entry here. I don't know what happened, but I remember there was something going on that day. Let's see. So I can't go backwards, or let's see if I can go backwards here. Let's see. Today is, or 28. Okay. So the 20, what day was that? 28. Check my FX book. Yeah, there was news right there. So we wouldn't have taken the trade at that time. But here's the second one. So there's another opportunity right here where price pushes up. It retraces down again right here. It'd be the same entry point at the 0 mark. So same thing again right here, long position. The ATR right there is 30. So you set it to 30. I don't know if it ever fills. Yeah, it does. So it actually fills right there. So the trade gets filled right there, and then it pulls through and hits TP. So this is an example that we actually would have gone with off the 5-minute. I don't have anything here that says to avoid news, but if you rewatch the live session from Friday, I'm pretty sure we discussed that. Because the thing is, if we took this trade here, we would have had a loss that day, but we didn't have any losses on Friday. So I'm sure there's a reason why we didn't trade that specific entry, because we were following both time frames. Let's see. Yeah, I mean, other than that, if there's any other examples that you guys want to see regarding this, I mean, it's pretty simple. It's straightforward. The only difference with the 5-minute is you would use a 1-to-1 or a short versus the 10-250 or 10-25. It just depends. So like depending on your time frame, if you're trading on the higher time frames, you probably want to go off the ATR because it's going to be a bigger move. Versus the 1 minute, because for the 1 minute, it's easy to get in and out of the positions really quickly, especially for 100 pips. You're just going to get in and out, take your profit, and wait for the next one. For the 5-minute here, you have to be a little bit smarter with the entries that you decide to take, and then also with your TP stop loss, because this type of trade is going to run longer. So you can see, for example, here, this trade actually runs for about, it would have filled right here, and it would have ran for about 15 or 20 minutes. So this is a lot longer compared to our 1-minute trades, which typically will hit, within 1 or 2 minutes. Gotcha. Okay. Yeah. So CJ said we didn't trade a 5-minute because it was stuck in the zones, news, and price wasn't going far enough past momentum. Gotcha. Okay. That makes sense. Okay. Yeah. So that makes sense. So I'm looking back right here, CJ, that does make sense because you can see that this entry right here was actually below the momentum signal. Okay, all right, that makes sense. I remember. Because I remember Gian sent me this trade too, and he was like, can you explain to me like why this didn't work out? And I was like, oh, because the entry came below the momentum. So yeah, thanks for the reminder, CJ. I just can't remember. We're looking at so many things every day that I don't remember what happens on those specific time periods. But yeah, thanks for the heads up, CJ. Other than that, let's see. Yeah, Shiv said, okay, that clears that up. I'll just back test like I have with the higher high and lower low strat, and then start using this on his live account. Yeah, no, for sure, Shiv. Unless I take it myself on live, if I'm ever taking a trade on the live session, guys, and I'm actually marking it up and telling you I'm going to take it, it's usually going to be a good trade. Because I'm looking for only the highest quality entries for us to take together. So yeah, I mean, if I take it, you can take it too. But yeah, if you want to keep testing it, feel free. You can always just use a smaller lot size or smaller contract size, just to get comfortable with it. But for the most part, I mean, it works. It's just you have to find those more quality entries. It's harder to find them during these types of markets because if you guys have seen for the past 2 weeks now, the market's just been going sideways like a lot. It's not the best type of market to take these riskier trades in. So I'm usually like pretty zoned in on the types of entry that I'm looking for more specifically. Yeah, CJ said, yeah, don't probably have a lot of stuff to remember. All right, let me just scroll up real quick before I get to that next question, Shiv. I think we have one more question over here from Talanji. So Talanji said, could be worth checking out on the 3-minute. I mean, yeah, you could. I haven't tested it on the 3-minute, Talanji, but I'm pretty sure it works well on any time frame. So I mean, we could look at the 3-minute. So let's see. I mean, there'd be an entry right here. There'd actually be no entry right here at this time because the entry would have been below this momentum. Let me go to like today's market. Let's see. So let's see. We had. I mean, obviously, we wouldn't be taking anything right here. You guys can see how crazy it was right there. Price started pushing up right here. Okay, let's see. So if you were to go on the 3-minute, I mean, you have to determine whether you want to use the ATR or not. The ATR right here is not as bad. It's like at 23, I think, at 740, 748. I mean, you can really use this on whatever time frame you like. It doesn't matter if it's on the 1-minute, 2-minute, 3-minute, 4-minute, 5-minute, whatever it may be. The strategy still works. It's just you have to figure out what your TP stop loss would be. So if you want to use it on the 3-minute, you might want to use the ATR. I think the ATR would probably be best because there's no fixed TP stop loss that you can really like put together for the 3-minute, especially if the ATR is really shifting. You can see the ATR over here shifts a lot faster on the 3-minute versus the 1 and 5. Because you can see over here, it goes from like 15 to 16 to 20, 24, 25, and then it goes to 23 over here. So for example, over here, if you were to take this, so price pushed up right here, the trend didn't turn green until like right here, this next candle. So again, looking at the criteria, look at momentum, bullish momentum here, price above the pivots, trend meter green, pivots are angling up. You can see there's a push to the upside right here. This candle is a retracement. So if that's the case, this candle right here retraced to the 40 mark. I'd probably take the entry over here at the 30 mark. Right here. So I would have a pending order here for a buy. ATR is at 23. Price comes down. All right, so, well, you'd have to close out for small. Well, so this is where it gets kind of tricky. Right here, I mean, you'd have the option. For me personally, I would pull out for a small profit. So price actually comes down, fills your order, it closes up here in profit. So I would probably close out here for a profit of 130 pips. But I mean, it's just really up to preference. If you wanted to hold on to it, I've seen a lot of people who just hold on to these positions, especially if they're ATR based, and then they end up hitting their TP. So I mean, it looks like it works, Talanji. I haven't tested it myself, so I can't say for sure, but I mean, it looks like it works fine. This is from today, on the 3rd or the 31st. So that's one entry from today. Let's see if there's another one that came up. So that's the first one right there. That one would have hit. This next entry would have happened kind of late after 8 o'clock. I typically don't trade between 8 and 9 because this is what happens. The market starts to move kind of funky. Unless the market has been pretty much dead all session. Right here, it looks like the market was moving. So entry would have happened at 7:54. That's where it would have gone filled. and then it would have pushed up to here. 806 is where the TP would have gotten hit right at 8 o'clock. I wouldn't take any entries right here. I typically just don't trade between 8 and 9, because this is typically what happens. You get that mid-market reversal, or you get like mid-market retracement. The only time I trade after 8 is if the market's dead. If the market's dead the entire session, then I do expect volatility to pick up at 8. But if the market's moving, like for example here, market moved between 6:30. I mean, it was moving a lot. It's just not moving straight. It was kind of just moving back and forth. So between 6:30 and 8, you see a lot of volatility right here. So I probably wouldn't trade after 8. I mean, let's see if we can find another example here for you. So it looks like there may be opportunity here for a sell. Let me see. All right, so price is pushing down right here. We'll look for the retracement. All right, so right here we have a sell momentum. Price is below the pivots. Trend meter is now red. Price is below the pivots. Pivots are angling down. We have price pushing down right here. This is a retracement momentum. The entry would happen at the 10th mark. Yeah, right there. So let's see if there's an entry here that actually fills. ATR right here is at 20. It's not very high, but it is, I mean, it's high enough. At the 20 mark right there. Looks like it fills. And then eventually comes down to its TP. So, I mean, it looks like it works to Longi, but again, you know, I don't have any like actual data to back it up, but I'm sure it works on any time frame. I mean, you can technically apply this on like, I don't know if I'd go up to the 10, because this is a scalp strategy. So if you're trading on the 10-minute, you're day trading at this point, right? But that doesn't mean that it won't work. So for example, over here, so we have a buy signal right here. Price pushes up. We have a bullish trend right here. Price retraces at this point, 18. Entry point would happen here at the 10. ETR right here is 17. It's kind of slow. This was happening at during London session. So again, I don't trade London, so I don't know how volatility typically moves around that time. I know during COVID it was fast, but it was always fast during COVID. So can't say exactly what to look for here. Again, right here, price doesn't fill yet. Price finally fills right there. It looks like the trade's now filled. Let's see, the ATR right here is at 16, so we just minimize it by 1 point. So the trade's active at this point, pushes up, and eventually hits TP. It takes a long time, but it does hit TP. So like, for example, here, price pushes down, it fills from this point right here, and it takes about an hour for it to hit, which makes sense because this is a 10-minute time frame. So you're going to expect to hold on to this position for like at least an hour. You'll expect at least an hour for the 10-minute, about 30 minutes for the 5-minute. And then when we're trading on the 1 minute, you're expecting like 5 minutes. So it's just a little different. It's just, you know, you can trade on different time frames. You just have to adjust. You would just base it off the ATR, because the ATR will actually tell you like, okay, price is probably going to move this much within that little time period or whatnot. So yeah, exactly. So Longi said, yeah, probably good confluence on the 10-minute too. Yeah, I mean, it works fine here. It just depends on like how you want to apply it. But for this specific strategy, well, I mean, I could be wrong. You could probably apply this on higher time frame. I just haven't really tested it, so I don't want to give you the okay. Let's see. We'll go to the 30-minute. Looking over here on the 30-minute, it's a little bit more messy. I probably wouldn't mess with the 30-minute because you're going too far out. Like at this point, you'll be entering a trade and then you'll be holding on to it for a really long time. So for something like this, I probably wouldn't apply this strategy on the 30-minute. Maybe you can apply it for something like Forex that goes up, like that's always volatile, like say something like GJ or something, or even gold. I mean, if you want to trade gold, let's see, I don't trade gold, but I don't even know what people trade. What is gold? I'm assuming it's GD or MCG. Yeah, I mean, the strategy looks like it works for gold too. I don't trade gold, so I don't know what you would be looking for here specifically. I mean, I guess we could look right here. Let's see, let's just replay at this point right here. All right, price pushes up, pulls back right there. It retraces to 95. I guess your entry would be at 90. mean, I don't know. I don't trade gold. I don't even know how these decimals work. Okay, so I don't want to use this as an example because I don't trade it, but if I did trade it, I would tell you because I can't tell like how the numbers are split right here. Because it says 99.4. I don't know if the entry would be down at 90 or it'd be at each whole number. I mean, it seems like it'd probably be each whole number. So like, for example, here. Yeah, that's what it seems like. So price pulls back right there. The whole number that it pulls back to would be at the 4. So your entry would be here at 3, I guess. Yeah, let me just see what it looks like. Entry would be right here at the 3. ATR right here is 3.3, so it'd be at 3.3, I guess. I don't know. That looks too tight. I don't know if I would take that. But it does hit. So you can see right there, it comes down, fills it, and goes straight to TP. Yeah, so I mean, it looks like it works good on gold. I just don't trade gold specifically. So I can't necessarily tell you. The spread looks good too. The spread looks like it's 0.1. So I mean, if there's something you guys want to play around with, feel free. But it seems like you can apply this for like basically anything. But the only thing that I apply for would be US 30, so that's or YM. So that's all I can really advise you guys to apply it on. Yeah, Solange said, yeah, he uses it for direction confluence only on the 10-minute like a snipe. Yeah, you can do that too, Solange. I mean, there's a lot of these things that you can use here to confirm as a confluence. If you want to use multiple time frames, use different strategies. There's just, you know, there's so many different opportunities that you can move with. So, all right, other than that, if there's any other questions regarding that, Solange, let me know. But if you do want to trade on the 3-minute or any other time frame, I would just recommend using the ATR to confirm the distance and the volume, because it's really hard to predict that unless you have, you know, a good understanding as to where it you know, where it may go. All right, so let me scroll up real quick. Another question over here from Shiv. So Shiv's asking, last one before I wrap up, if you don't mind, someone in the group identified a V1, maybe getting it wrong on the 5-minute. I mean, let's take a look. So let's see if there's any V1s that came up over here. So this is a 5-minute time frame. We'll see if there's any V1s that came up today during the live session. So the bias for today was bullish. It wasn't very strong, but it was bullish. I don't see if there's any V1s here. Let me just replay to 8 o'clock. So I don't see any V1s over here on the 5-minute. Let me go over here to the 1-minute. There might have been one over here on the 1-minute today. So, yeah, I don't see any V, or actually there was one right here. So I can't for sure say like what the bias was for today. I think it was bullish though, because the retail sentiment was bullish. I mean, it's still bullish right now. So I do think price will push up eventually. It's 79% short again. So I think price will continue climbing up. I know earlier today it was at like 75% or 76. So it was bullish with regard to retail sentiment. The fundamentals here were pretty much flat. So they weren't really bullish. They're bullish now, but they weren't bullish this morning. And I think the lower time frame was also bullish, or the higher time frame was also bullish. So if that's the case, where we had, I thought I saw a V1 here. Yeah, so if that's the case where we had sorry, I think I may have been seeing things here. Oh, it was over here, sorry. Okay, so if the overall direction was bullish for today, or overall bias, which I think it wasn't a strong bullish bias because it was just the retail sentiment and the longer trend time frame. Fundamentals were neutral, and the short-term technicals were also neutral. So we had so I think today's overall bias, this is what it was looking like. Retail sentiment was bullish because it was 76% short. The fundamentals were neutral because it was like plus 40 points. It wasn't enough. It needed to be above 100 points. Short-term technicals, it was neutral, and long-term technicals was bullish. So this is what the overall bias was for today. If I remember correctly, I think this is what it looked like at 7 o'clock over here. So looking at the V1 variation, you're looking for a pending momentum signal. Right here, we have a sell signal. So the next signal would be a buy signal. So that's where we have a pending momentum. Looking at this right here, you can see there is a double body rejection. So that'd be the setup right there for the double body. If you were to take that trade there for a buy, that's where it would be. Your TP stop loss would be 1030. And I think this is the only V1 variation that came up today. So this would be the V1 variation that came up, double body, pending momentum for a buy. Overall bias today was bullish. It wasn't very strong, but it was bullish still. So if that was the case and you took the trade there, it would have went straight to TP. So that'd be the only V1 variation that came up today, Shiv. I'm not sure if there's anything else that like you missed or anything else that you saw, but this one came up around 7 o'clock. So I think that's the only one that came up. Going a little further here, there's no V1 variation here. They're not a double body. This would be a V2 variation, but not a V1. It's a V2 because there's a, or actually no, this wouldn't even be a V2 because the low would have to be a red candle. So no V1 there. There's no V1 here because the body's not on the same level. The wicks they're close, but they're not on the same level either. There's no V1 right here because there's no double body or double wick. And that's pretty much it, I think, because we cut out of this live session like around 8 o'clock right here. And that looks like the only V1 variation that came up. This right here would actually be, actually no, it wouldn't be because there's no pending momentum. But yeah, it looks like that's pretty much it. So that would have been the V1 variation from this morning. All right, so if there's any other questions, guys, feel free to put them in the chat. I don't really see anything else here, but I'm willing to stay on for as long as you guys need. So if there's any questions that you guys have, if there's any entry that you guys took and you're confused about it, just let me know. And I can answer the questions. All right, let's see. One question over here from James. So James said, is there any situation where you would recommend for someone to only take minimum one-on-one setups? Not necessarily, James. I personally like trading on the 1 minute because the 1 minute provides you with more opportunities, and it also, you just have better entry points on the 1 minute because you're getting in at every 1 minute candle. So a situation where I would recommend to someone to only take the one-on-one might be for the, and I don't want to say for sure, but for like the high-level momentum scalps, because the thing with the high-level momentum scalps is that you're trying to catch price pushing in a range, right? So for example, right here, I mean, it wouldn't really matter because even if you take a 1-to-1 or you took the regular, whatever we would take for the high-level momentum scalps, you'd still hit your TP. It's just you'd have a better, you'd have better risk. You'd have a better risk profile if you were to do a 1-to-1 here. So for example, if you're doing the high-level momentum scalp, you have a higher high right there. This candle broke the close past pivots 1 and 2. So let me just show you the difference here. So the original entry or the original TP stop loss for this would be 1030, right? If you had 1030 right there, it would have hit TP, right? Next candle comes through, would have hit TP right there. However, if you want to do a 1-to-1, you can take higher risk. And the ATR right here was, what's the ATR? ATR is 17. So instead of going for 100 pips, you go for 170. Your stop loss will be a bit tighter. But I mean, either way, if you go for 1-to-1 right there, you still hit your TP. I think the 1-to-1 risk reward TP stop losses work well for ranging markets. So if you're trading in a very directional market, the 100 pips is like it's like almost a guaranteed win, right? You're going to go at least 100 pips, so you're going to hit your TP and get out. When the market's ranging, a 1-to-1 makes more sense because if price is going to go back and forth, if it's going to range, like say for example here your ATR is 19, right? And then we have this setup over here. Like this is what your range is looking like. So if that's the case and that's the range, you're probably gonna hit your TP eventually, right? It's either gonna go straight to your TP or it's gonna bounce in between a bit and then go straight to your TP. So, for me personally, I mean, it just depends on the person. For me personally, I trust the strategies because I've tested it. So I know that the negative risk reward works. Because if you're looking for only quality entries and you're following the trading plan properly and applying the strategies how they're supposed to be applied, you should be fine with the negative risk reward. You'll be able to get in and out faster. Like one example where you kind of not want to take a 1-to-1 is if price is like barely moving. So for example, here, if the ATR is like below 15, and you're taking a 1-to-1, you're gonna be stuck in that position, right? So I don't know if there's an example here that I can show you, but if the ATR is too low, of course, if you're going for 100 pips, you'd rather get in and out quickly, right? If the volatility is low, if the volatility is high and the ATR is like 19, then you're okay because you can just hold on to the position and it'll eventually go to your TP. It might take a while to go to your TP, but eventually it'll probably hit your TP. The problem with this here, you can see the difference here, because if you're going for the 10-30 split, you'll be able to get out, get your TP, and then you might not have another entry. So say price pushes up right here, like say you have the same pattern right here, right? See how this pattern goes up and down? And then you'll just get one win here, right? Because you're only going for like a 19 pip TP. For example, here, if you're trading with a 100 pip TP, then price will push up, hit your TP, pull back down, go back up, hit your TP, come back down. And you'll have like 3 different entries here to take. So does that make sense, James? Like, it just depends on the person. Like for me personally, I'd rather get out, get back in, get out, get back in, get out. So I have like 3 wins right there versus 1-to-1 risk reward here. You're going to be going back and forth, but you're going to be like profit, retracement, and then you'll hit your TP. So the 1-to-1 will be safer, but if you know the strategy and you know it hits, I would get in like 3 times versus holding on to this and just holding on to it for like, 5-10 minutes versus holding on to it for a minute. Yeah, so it's just really up to preference, James. I think like once you're like more comfortable with the strategies and you understand that like that 100 pips is really easy to hit, I think you'll actually like doing negative risk torque. You'll be able to get in and out very quickly. But yeah, I mean, it just depends on the person. So like some people don't like trading 1 minute. So that's why if they want to trade on the 5, they can get the same, like basically the same result. It's just going to take longer and they're probably going to have less entries. But then in that case, you can always just take more risk. So say, for example, here for the negative risk toward, I'm risking like 1%, right? 1% or 2%. If I'm doing the 1-to-1, I could risk like maybe 2% or 2.5% because then I'm just going to make the same amount of profit, but taking less trades. So it's just really up to preference. But yeah, I mean, if there's any other questions, guys, feel free to put them in the chat. That was a pretty good question, James. Thanks for asking that, because I know a lot of people, they have the same question, but they don't know how to ask it. But yeah, everybody's trading style is a little different. Let's see, question from Talanji. Talanji said, I'm trying to build my LLC to the point where I can get accepted for better banks and credit, but I keep getting rejected. I'm attempting to describe it as a business consulting, but is it tricky to explain? I haven't submitted last year's accounts taxes yet, so it could be that. I'm not sure like what the issue would be, Solange. So what do you mean by building your LLC? Because the thing is, when you start a new company, there's no credit. You don't have credit because you've never been around, right? So there's no reason that you should be rejected. Like, are you trying to pull out a bank loan or something? Because they're not going to give you a bank loan if you don't have any business credit or any credit in general. Like if your credit sucks, if your personal credit sucks, you're not going to get any business credit, right? If you have like a low credit score for your personal, let's see. So what's your problem specifically, Talanji? So let's break it down to a point where I can understand what you're asking. So what is your problem? You're trying to get credit, or the thing is you don't need positive items in your business thing. You need to have a business that's been around long enough, Talanji. Because the thing is like they base it off like the life of your business. You can't just start a business like, hey, let me get $100,000 loan for this business that I've never had before, right? You're gonna be like, Solange, get the fuck out of here, bro. Like, who are you? You're asking for a loan and you've never been in business. Like, they're not gonna give you a business loan. Like, it depends on the life of your business. So, like with K2, right? With the K2, I've been in business for like 7 years now. So for me, I can pull out a business loan because it shows that I've been spending money and using my credit cards and paying them off whenever they're due for like years on, right? So I have like a history of maintaining business. You can't just like open a business and then go get a business bank loan. If you're gonna pull a loan, they're gonna pull your personal credit. So I think the first thing that you need to fix is your personal credit. I'm not sure what your personal credit looks like, but you're gonna be the collateral. So like they're going to look back to your personal credit and say, okay, Solange's credit's here. He doesn't have good business credit, but let's look at his personal credit. If your personal credit's not good, then that's where you need to work on. Because I don't think there's an issue with your business. Like there's people who like don't never have a business, but they have really good credit. So they'll pull the loan. Yeah, you can expect to pull a business loan for like another couple of years, Solange. If you've only been open for 1 year, you're not going to be able to pull any business credit. I mean, you'd have to pull the business credit from your personal, and then, I mean, there's like it's like it's hard to explain. There's courses for this stuff, like for like credit and stuff, but it's like a scammy way of doing business. Like there's ways that people open credits. Like what they'll do is and it's crazy. They'll have like 5 windows open. Like say, for example, they're applying for a credit card, right? And this is not any type of business advice. I just know this because I know people who do this, and it's a real scammy way to like open credit. They'll have like, so say they have 5 different applications open right on the screen, like 5 different banks, and they're applying for the credit card. What they'll do is they'll apply for the credit card on all of them. And then within like 1 second, they'll hit apply on every button. Because the thing is, when they run your credit, like they'll hit apply. They'll hit like apply, like really quick, because it's going to pull their credit, and it's not going to show a hard inquiry on their account if they pulled credit like all at the same time, because they're pretty much going to get approved all at the same time. That's how people get a ton of credit. What they do is they build up the credit, and then they apply to like 5 or 6 different banks, and then they just hit apply at the same time so that they don't have a hard inquiry. But then it kind of screws up your credit for like the next 6 months, because it shows that you just pulled credit like 6 times. So there's ways around it, but I mean, unless you really need the business, like what would you need the business credit for, Talanji? Are you trying to open more accounts? Because if that's the case, then you probably shouldn't be doing that, because that's just going to put you in a ton of debt. I would probably do it the proper way and get funded, and then just like build your capital that way. I mean, the only reason you would need to have like a crazy amount of credit, like you need to pull a big loan for, is if you have a debt to pay, right? So say, for example, your business bankrupts, and then you have a debt to pay, then yeah, you could pull out credit so you can pay off that debt. But if you're just pulling money for no reason, say because you want to go buy a new car, or you want to go move into an apartment or something like that, like if you have a real reason for the money, then it would make sense. But if you don't really have a real reason for the money, then don't do it, because you're just going to mess up your credit in the future. So just keep that in mind, guys. I mean, business credit is a good idea if you have something to use it for. If you have an investment to put it into, if you're buying real estate, something like that, then, great, pull the credit if you have somewhere to put the money. But if you're just pulling credit just to have money and say you have money, it's a horrible idea, because it's going to come back and bite you later if you're not using that to produce more money, right? Because the thing is, you can pull a loan out, and you're still going to owe interest on that loan. So say you pull 100K out, and it's like at a 7% interest rate or 9% interest rate, depending on the business. You're gonna have to pay that on top of interest. So if you're not making any money off that loan, then there's no reason in pulling the loan to begin with. It's just a horrible idea. Yeah, let's see. So Talanji said, my bank account is threatening me, saying don't trade on it. So I'm trying to open a bank account, better banks, but I'm getting rejected. I'm just kind of confused, Solange, like how this is happening. Because because you said you have good personal credit, I don't understand why they would be rejecting you. Like, I didn't even have a business when I opened my first business, which I didn't even have good credit. I opened it with Chase, and Chase is considered a good bank. So I'm not really sure why you're getting rejected. I feel like you're getting rejected for a different reason. You might be doing something wrong. And I don't even know how would they even know that you're trading on it, because you said that you told them that you're doing consulting, but you said that your bank is threatening you not to trade on it. So you have to have told them that you're trading on it. So that's why they're rejecting you. They're rejecting you because you're doing the complete opposite of what I told you to tell them. Like, you tell them you're doing consulting, they wouldn't know you're trading on it. So why would they even threaten you? So like, what bank are you with right now, Solange? Are you with like a regional bank? Or are you with like a big bank? I'm assuming you're with like a regional bank, like a credit union or something. But if you have good personal credit, there's like no reason for them to be rejecting you. Like, there's zero reason. The only reason they'd be rejecting from you is if you're telling them something that you're not supposed to be telling them, like telling them that you're trading. Because I think that's what you did. You probably told them that you're trading, and they're rejecting you for that reason. It's not because like your business hasn't been around long enough. It's just that it's a conflict of interest. Yeah, Tony, I'm not sure. That's the only thing I can think of. Okay, so you're in the UK, so that's different too. Yeah, so yeah, so I'm not sure, because you're in the UK, so it's probably different out there. No, I don't think it's because of FTMO. So Solange said he guesses that they see FTMO all over your expenses, and now they see it as trading. I don't think so, because a lot of these banks don't know what FTMO is. I don't think anybody, like, unless you explain to them what FTMO is. FTMO is such a generic name. It says FTMO SRO. There's no way they could figure out what FTMO SRO means. Like, the FTMO doesn't even stand for anything trading either. So I think what you should do is you should probably talk to somebody that handles like business accounts in the UK. Because I'm not in the UK, so I can't really give you any advice or even tell you what to do. Here in the US, I'm pretty sure it's very similar, but I mean, I can't necessarily tell you exactly how they handle things in the UK. But I highly doubt it that it's because it shows FTMO on your expenses. That's probably like the last thing that would be the case. The only thing that would be the case is if you told them you're trading. I'm pretty sure that was the case, because I remember the last time we talked, you said that you accidentally told them that you were trading, and that's probably why they reject you everywhere, because you already told them. You pretty much snitched on yourself. you pretty much just snitched on yourself, and told them something that they don't work with, because banks don't work with traders. If you tell them that you're a trader, they're not going to want to handle your money because it's a conflict of interest. The thing is, they trade too, so they can't be handling accounts with people who actually trade. So yeah, I mean, you're probably doing something wrong, Solange. I'm not sure exactly what it is, but it just doesn't sound right. If you have personal credit, like, you shouldn't be getting denied anywhere, whether it's the US or the UK. I don't think it's that much different out there. And I don't think it's because of FTMO, because FTMO is such a generic name. Like, you could be receiving payments or making payments to yeah. So Talanji said, when they asked for a proven contract, I submitted an FTMO account contract. Well, yeah, you basically told them that you trade because the contract says you're trading on it. So you basically you did exactly what I told you not to do. Yeah, Solange. So you pretty much just shot yourself in the face by giving them an FTMO contract that says that you're trading for that. Why would you do that? Out of all the things, you could have just made a contract yourself. You could have made it. Man, that's crazy, Solange. I mean, yeah, you literally told them that you're trading, so that's why they're denying you, because you just told them that you're trading by giving them an FTMO contract that says that you're trading for FTMO. So yeah, uh, I mean, at this point, I don't know, Solange. You probably have to go. You probably, I don't know like how else to advise you. Like whatever bank you showed the FTMO stuff to, they're probably not going to accept you because they already think you're lying to them. So they're not going to want to open any accounts with you. So I don't know. I would probably just recommend you talk to somebody that handles like business banking in the UK that you're like, that you're personally, that you're friends with, and they'll probably tell you what you need to do. But for the most part, it looks like you pretty much just screwed yourself over by, because I told you I told you guys this from the beginning, like you should never tell a bank that you're trading because it's a conflict of interest. Like I've had the same issue with myself. Yeah, CJ said Wolf Sean got to the bottom of that real fast. Yeah, I mean, it's all good, Solange. But all right, if there's any other questions, guys, feel free to put your questions in the chat. I know we kind of went off track right now with Solange's issue, but it's okay. I mean, it's best that you guys hear it directly from someone else who kind of screwed up with it. Guys, just a reminder, if you guys are ever going to register a business, whether it be in the US or UK or wherever it may be, don't ever tell the bank that you're trading. Just tell them that you're doing something, that you're consulting, because that's really what you're doing. With FTMO, you're not trading a real account. So you're not necessarily trading. What you're doing is you're trading, you're not trading, you're exchanging your ability to read the chart. So your skill here is your ability to read the charts, right? You know where price is going to go, you know where to get in, you know where to get out. Your ability to read the charts is what you're exchanging the payouts with FTMO. So you guys just have to get a little creative with it, because I mean, in actuality, yeah, you're trading an account, but you're not trading a real account. Like if you look at FTMO, they tell you that you're trading a demo account. When you log into your account, it's a demo account. It's not a real account. So you're kind of just playing a game, basically. You're playing a game where you're exchanging your expertise of like reading the charts. And then what happens is they copy your trades. So your account that you're trading with FTMO is not a real account. It's a demo account. What happens is when you execute trades on your account, then their copier copies it to their real account if they trust you. And then they're the ones that are trading. So you're not trading, they're trading. And the money that they make from basically your analysis is what gets paid out to you. So you guys just have to, it might not seem as obvious as how I'm making it seem, but it's pretty obvious. And this comes like from my lawyer background, because, when I was working as an attorney, you kind of have to like bend the facts a little bit to make things work in your favor. And this is really what you're doing. You're just bending the facts. You're not necessarily trading a live account. If you're opening your own account, so say, for example, you opened a Tradeovate account with your personal, right? If it's your own account, if that's the case, then yeah, you're trading a live account because you're trading actual money. But since you're trading with Top Step or you're trading with FTMO, you're not trading a live account, you're trading a demo account, and they're just copying the trades from those accounts. So just keep that in mind when you guys are applying for a business. Put that you're doing consulting, don't put that you're trading. If you're applying for a business bank account for your trading, or not necessarily trading, but for your FTMO, like if you want to get payouts to your bank account, don't say that you're trading, say that you're doing consulting, because that's really what you're doing. You're providing a professional service, reading the charts and making entries for a commission, basically. So just keep that in mind, guys. Unfortunately, Solange, I think you're kind of screwed with those banks that you tried with. You have to you probably just need to find someone that works at the bank and then have them go into your file and then take the flag off your file. Because I feel like your file just has a flag on it. So there's like a flag on your name. Whenever you apply for anything, there's a flag. So when you apply, the flag goes up and then it says automatic denial. So you need to have someone that like works in the bank that can go into your file and take that flag off. Because I think once that flag is removed, then you'll just go back to like a regular person. But I think you're already on their radar as like a guy that's lying, and like they basically think you're trying to scam them to some extent. So yeah, go make friends with a banker. Go to the bank and make friends with the banker. So that you can explain yourself and then they can take that flag off you. Because that's what happened with me when I first opened my bank accounts with Chase. I had a flag on my account, but the thing is, I'm a Chase private client. If once you have like a certain amount of money in an account with Chase, they bump you up to like private client status. And then I have like a private banker. So like that banker, I just explained to him like I'm not trading. I'm doing like consultation, or I'm doing some type of professional service, and they just removed the flag off my account because I had the same situation. But now I know better. Now I don't tell them that I actually trade. I do professional. I'm a professional chart reader. That's basically what I am. And that's kind of how I got around it. So all right, guys, other than that, if there's any other questions, feel free to put them in the chat. Otherwise, we'll wrap this up. We've been on the session for a bit over an hour. I think we answered pretty much all the questions. Let's see, Talanji said, yeah, exactly. CJ said, I say that I'm a market analyst. That's literally what you need to say. You just got to say something like that. Be creative. Just don't say you're a trader. And you should be good. Let's see. James is asking, are you going to continue using Tradovate despite the ongoing issues today? Yeah, so I'm going to keep using Tradovate, but I think for tomorrow, James, I'm going to be executing my trade directly on Tradovate. So I'm not going to do it on TradingView. I'm going to do it on Tradovate. Because if you guys saw what happened during the live session today, I put a pending order and that order like never filled. And then it ended up going on my screen and I canceled it. And then I put up another order and then it executed to fill, but not to close out. So I'm going to keep using Tradovate, but I'm going to use the actual Tradovate application to put my pending orders in. Because I think if you trade directly on Tradovate, there's no problem. The problem is between TradingView and TopStep. So if you try to use a TopStep trader or TradingView, there's going to be a latency issue. There's going to be an issue where it's not connecting. But if you trade directly on Tradovate, I think you should be fine. So I'm hoping that I entered the trade on Tradovate and it still shows up on my screen here. Otherwise, I'll mark it up and you guys will still see where I'm entering from. So it's not going to be a big deal, but it's going to, I think it'll be fine if you trade directly on the platform, because I can't see Tradovate not working, right? Tradovate's it's a big platform. It's not like something small. So I think their actual live accounts on there still work fine. It's just the issue between the connectivity between TradingView and Tradovate. So, all right, guys, I think that's it for today. If there's any other questions, feel free to reach out. Otherwise, I'll be back here tomorrow, same place, same time for our live session as we continue on with this trading week. But hopefully it picks up. Let me check for tomorrow real quick. Yeah, tomorrow we have some news. So we have news over here at 7 o'clock. It's ISM manufacturing PMI, Joel's job openings, ISM manufacturing prices, construction spending, and then FOMC member Goolsby is going to be speaking as well. So we have some news tomorrow. Hopefully that will cause some volatility to, actually push price away from opening price today. It's just super annoying when price sits around opening price because it doesn't really do anything and it just stays at zero pretty much the entire day. So, all right, guys, other than that, I will see you guys tomorrow. If you guys have any questions, reach out. Otherwise, we'll be back here at the same place, same time. So, all right.